All right, let's dive into the world of Bitcoin. I feel like it's unavoidable these days, right? You see it everywhere.
Oh, absolutely. It's been inescapable, really, especially over the last few years.
So today we're trying to get past just the headlines and really understand this thing.
Right, right. Get into the nitty-gritty.
BlackRock, big investment firm,
Exactly.
not who you think of when you think of, dissecting Bitcoin.
Yeah, a little unexpected maybe, BlackRock.
Coin.
Not necessarily the first name, but their report, Bitcoin, a unique diversifier, is pretty fascinating.
They start off by pointing out what they see as some flaws in traditional money, flaws that Bitcoin just completely avoids.
Yeah, inherent flaw,
Inherent flaws, and they even say, quote, Bitcoin's hard-coded supply cap at 21 million units means it cannot be easily debased.
which gets at, I think, one of the biggest criticisms of government-issued currencies.
Right.
The fact that central banks can just print more whenever they want, which of course causes inflation, devalues the money in your pocket. Bitcoin directly addresses this by having a fixed supply. It's all set in stone by the code.
It's like comparing a limited edition collectible to something that's mass produced.
Right.
There's just inherently going to be less of it.
Built-in scarcity, yeah.
And this ties into another point they made. Quote, its global digitally native nature means it can be transported anywhere in the world at real time at near zero cost, transcending the frictions long inherent in moving value across political borders.
It really highlights how clunky and outdated our systems are. Think about the last time you tried to send money overseas. The fees, the delays.
Yeah.
With Bitcoin, it's just instantaneous. It bypasses all of that.
It's more than just a digital payment system.
Right, completely different.
This is a whole different ballgame here.
Yeah.
And they say that, quote, its decentralized, permissionless nature made it the world's first truly open access monetary system. Okay, break down permissionless for me.
That's really the key difference here, right? It's not controlled by any single entity, not a government, not a central bank, not a specific company. It's completely decentralized. And this was a radical departure from earlier attempts at digital cash, like DigiCash back in the 90s, but it ultimately fizzled out because it still relied on this central authority.
Mm.
You still needed permission from the DigiCash company to process transactions. It was vulnerable to censorship, to being shut down, all of those things.
Yeah.
And at its peak, I think it only had around 5,000 users.
5,000.
Yeah, compare that to Bitcoin's, what, almost 600 million estimated today? Sure. And, despite the emergence of thousands of other cryptocurrencies, Bitcoin still accounts for over half of the entire crypto market. That staying power is undeniable.
Okay.
Yes.
Okay, so what's the right thing to look at? The long game.
BlackRock actually points out that Bitcoin has outperformed traditional asset classes, stocks, bonds, gold, you name it, in 7 of the last 10 years.
Get out, even with those huge drops.
Well, I think this goes back to Bitcoin being fundamentally different, right? It's not just a stock or a commodity. It's potentially a global monetary alternative. So as more people and institutions start to see it that way, that demand is going to grow. And the price, even though it might be a bumpy ride, is probably going to reflect that.
It's like, it is. How do you explain those kinds of games with that kind of stomach-churning volatility? It's like this whole new asset class with its own rules.
Yeah.
And speaking of rules, BlackRock gets into how Bitcoin kind of breaks our traditional ways of looking at investment.
It challenges the old risk-on, risk-off playbook.
Remind me what that is again. Sometimes I feel like I'm back in Finance 101.
Sure, it's basically how analysts try to predict how an asset will perform based on market sentiment.
Right. Gold, government bonds, that kind of thing.
You got it. So risk-on assets tend to do well when investors are feeling good, the economy is strong.
So which way is it going to jump? Nobody knows.
Exactly. Risk-off assets, on the other hand, are those safe havens people flock to when things get dicey.
Right, really. If it's not risk-on or risk-off, what is it? What's driving all this interest, especially now with all this global uncertainty? Yeah.
But Bitcoin doesn't neatly fit into either category. Like the report literally says, quote, Bitcoin's unique nature makes it unsuitable for this and most other traditional finance frameworks.
But how does it compare to actual gold? I mean, that's been the go-to safe haven for, ever.
It's not strongly correlated with a lot of the macroeconomic factors that drive other assets. For example, its correlation to the U.S. stock market is super low over the long term. Although there have been these interesting moments where we do see those correlations spike, like during the COVID crash in 2020. Initially, Bitcoin fell along with the stock market, but then it recovered much faster than, say, the S&P 500.
So people got scared, sold off some Bitcoin, and then what? Why the term?
That's the question,
Yeah.
right? And BlackRock suggests that Bitcoin's appeal is tied to those very anxieties, the geopolitical stuff, concerns about the traditional financial system.
Yeah.
Some people are even calling it digital gold.
All right, so don't go betting the farm just yet. But I do want to go back to something you mentioned earlier, risk-adjusted returns. What does that actually mean for the everyday investor who might be thinking about dipping their toes into Bitcoin?
Well, it comes back to Bitcoin's unique characteristics.
Hmm.
The fixed supply, the decentralization, the fact that no single entity controls it. The report actually points out that Bitcoin has rallied during several major global events. Remember the US-Iran escalation a few years back?
Yeah.
Bitcoin dipped initially, like a lot of assets did, but then it bounced back stronger than before. And we saw a similar pattern during the early days of COVID and again after Russia invaded Ukraine.
Independent entity, like we were saying earlier. Okay, but let's be real here. This is all sounding pretty rosy. Is BlackRock saying Bitcoin is like a guaranteed home run for investor?
Even in a crisis, I can sell my Bitcoin, get my hands on some cash. It's not like, trying to unload a house or something.
Exactly. It's the definition of a liquid asset.
But I think the appeal goes even deeper than that. There's this growing awareness that Bitcoin operates outside of the traditional systems. It's not controlled by any one government or institution, which, in times of global uncertainty, well, that can be very appealing.
It's like,
Balanced, they emphasize that Bitcoin is still a risky asset. Regulations are still evolving. There could be unforeseen challenges. It's not for the risk averse, that's for sure. Definitely not a get return.
because it's so different from everything else, right? It zigs when the others zag.
The risk-adjusted return is a way to measure how much return you're getting for the level of risk you're taking on. It's about comparing different investments fairly, even if their risk profiles are totally different.
Okay, makes sense.
And what BlackRock is suggesting is that within a well-diversified portfolio, stocks, bonds, real estate, the whole 9 yards, a small allocation to Bitcoin could potentially boost those risk-adjusted returns.
Finding that sweet spot is key then. Not too much, not too little. This has been really interesting. Any final words of wisdom for our listeners who are still on the fence about Bitcoin?
My advice, educate yourself, understand the risks involved, and then decide if it deserves a spot in your portfolio.
Do your homework, then dive in carefully. This has been a fascinating deep dive. I feel like I learned a lot, even if I don't totally understand everything about Bitcoin just yet.